Investing into an index fund is one of the best and most powerful ways to build long-term wealth within the stock market. So today, I wanted to make a video explaining number one, what exactly is an index fund? And then number two, what are the main benefits of owning one? So if that is something you are looking for, hit that like button down below and let's jump straight into it. All right, so what exactly is an index fund? Okay, so the best way to explain what an index fund is like this. When you invest into an individual company, let's say Apple or Facebook or Coca-Cola, Disney, you get the drift, you are basically buying a small piece of that business. You buy your share for a certain price, and then if that share price was to go up, you could potentially sell that share for a profit. Now, when you invest into an index fund, what you are essentially doing is buying a collection of companies instead of just one, and most of the time, people will buy a collection of stocks from a certain market index, which is pretty much where the name index fund comes from. For example, you may or may not have heard of the S&P 500. This is basically an index that tracks the top 500 companies in the United States. So, if you wanted to buy an index fund that tracked the S&P 500, you would be buying a small chunk of every company in that index instead of just buying a larger chunk of just one. In addition to investing into the more broader indexes, you can also find sector-based indexes that are tied to specific industries. For example, if you are interested in investing into the technology sector, you could potentially buy into a technology-based index fund where every single company in that index fund was in the tech sector. One final thing to mention is that index funds are passively managed funds as opposed to actively managed ones, and basically an actively managed fund is where someone is trading your money for you on a day-to-day basis, so they are constantly buying and selling stocks, whereas an index fund just tracks a market and just doesn't do anything else. So just to summarize, an index fund is basically a collection of stocks instead of just one. Now, let's move on to some of their benefits. Okay, so the first main benefit of owning an index fund are the low fees associated with owning one. Like I just mentioned, with an actively managed fund, people are constantly buying and selling shares for you on a daily basis, and doing this will result in higher fees because they have to get paid one way or another. However, because index funds are passively managed and shares are not being bought and sold on a day-to-day basis, this cost does not need to be covered, and this ultimately provides you with much smaller fees over a longer period of time. Of course, in turn, saving you a lot of money, and there's no better example than just using this chart here, where we both have a passive index fund and an actively traded fund's performance on the S&P 500 between 1980 and 2015. As you can see, the index fund has a 0.06 fee and the active one has a 2.27% fee, and I'm sure we don't need to talk about the difference there because you can see the index fund completely outperforms the actively traded fund. And this is of course for two reasons. Number one, there isn't someone just trying to beat the market, because 90% of the time that never happens, but we'll save that subject for another day. And then number two, ultimately the main reason is because of the lower fees. The second main benefit to owning an index fund is that it is much less riskier than just owning one stock. For example, let's just say you owned £100,000 worth of a single company that was in the S&P 500, and for one reason or another that company went bankrupt and their stock price went all the way to zero. Because this has happened, your investment value would effectively be zero. However, let's say you are investing into an index fund that tracked the entire S&P 500 and you owned a little bit of every company in that market. You then have another 499 companies that you're invested in, and the likelihood is you wouldn't even notice a difference. One really great way to think about the risk involved with an index fund is this way. Once again, we're going to use the S&P 500 as an example, and let's say for your S&P 500 index fund investment to go all the way to zero, that would mean the top 500 biggest companies in America would have had to have completely shut down. And if that was to happen, we would likely be facing an apocalypse, and your investments would pretty much be the last thing on your mind at that time. So basically, benefit number two is that whilst there is risk with every single investment you do, there is a lot less risk in index funds than just buying individual companies. All right, so the third and final benefit of investing into an index fund is my favorite, and that is you will save hours of time on countless research, as there is absolutely zero required other than comparing different funds to invest in. For example, when you invest into an individual company, you need to understand that business inside out. You need to be able to look at all of their previous balance sheets, check their income statements, listen to their previous earnings calls. The list goes on. But with index funds, you are very much investing into the market you're interested in, and that is it. So there you go. In my opinion, index funds are one of the best ways for both beginners and experienced investors to diversify their portfolio and build solid long-term wealth. Now, if you have watched this video and you now feel like you understand index funds a little bit more, and maybe you wanted to check a little bit more information about some, what I have actually done is listed some of the investing apps in which you can do that. But my personal favorite one to go ahead and check out is FreeTrade, who actually have a dedicated section for index funds, and they provide a really great and easy to understand description of each one. Also, if you were to actually go ahead and sign up to FreeTrade with my link down below in the description and deposit £1 onto the platform, you will actually receive a free share worth anything between £3 and £200 as a welcome bonus. Finally, if you did enjoy this video, I would really appreciate it if you gave it a like down below, and of course subscribe to the channel if you haven't already. It really helps me out so much. And apart from that, I will see you guys in the next video. Take care.